Hi traders, Stacey Burke from Stacey Burke Trading. Today we're going to be talking about the main reasons why I love end-of-day trading. Now, just a real quick summary of my own experience. Originally, when I was exposed to seriously looking at how to trade the markets, that was all end-of-day trading. And one of my mentors, you know, he had done it all. He'd been trading for years, and he told me even then, you know, day trading is a loser's game. That was on the futures market, and I learned some fantastic, my early education was fantastic. It was really old school, trend lines, hand-drawn charts, and I learned an immense amount going bar by bar and drawing those charts by myself. Each day I would update those charts. Manually I would get the data in the morning. The closing prices for the Sydney Futures Exchange would be posted online, and I would get those numbers, hand draw them onto my charts. Wasn't too long after that charting packages did become available, and downloadable data became available also. But it was a great experience, and I learned a lot from that. But also, what I also learned was that I learned price action, and when you draw those charts bar by bar, you can learn an immense amount. But just to hash on that and speed things up, a friend of mine sort of exposed me to Forex trading a few years after that, and the more I learned, the more we thought if we can do well on the end of day, perhaps we can do even better intraday. And I found myself spending longer and longer just consumed with studying price action on the charts, looking for ways to try and beat the market. And I found that I was spending 8-10 hours a day studying and looking at charts, and I was actually not getting any better in my trading, and in most cases I was going backwards. But just today we're going to talk about my main reasons why I love end-of-day trading. Number one, you can still keep your day job. I know a lot of people want to pack in their job, they hate their current situation, or they don't like their employment, they don't like their boss, they don't like their business, whatever that is. They see trading as a way out, but they haven't yet got to the point where they've been able to be consistent with their methodology and their money management and producing a small return. And that's really important, because you need to be able to do that before you can walk away from your day situation. So the great thing about end-of-day trading is that, you know, New York close for me is in the morning here in Perth, Western Australia, 5 a.m. I get up, I check my charts, and that's for most of the metals, oil, gold, softs, the currencies. And as New York is winding down, the 24-hour rollover for the currencies is just starting again in Asia. And also our markets here in Australia and Asia and Singapore are opening up, the indexes are opening up. So it's a great opportunity for end-of-day trading. Once you've got your systems in place, it's a matter of possibly running some scans or manually going through, if you're a discretionary trader, and checking your charts for any trading signals that may present. Number two, lifestyle. As I said before, I was spending hours and hours on the charts. Whereas, you know, for me, it was always about freedom of time. And if I wanted to go away or take a holiday with my family or go to the beach, I can still do that with end-of-day trading and still check my charts. If you're day trading, what you'll find is, I think, if you start to look at how much you're getting paid per hour you're spending on the charts, it's a lot less, and even if you're consistently successful, it's hard work. And that's my next point. If you're trading end of day, you can look at multiple markets, and you can position trade yourself, swing trade or momentum trade. You can reduce your risk, and you're less likely to take impulsive or irrational trades. What often happens to day traders is that they will often find they'll get frustrated sitting there waiting for the right opportunity, or if they do take a trade, they might get stopped out and they take another trade, they try to get even, they double up, or they average into a loser, or they just get completely off track and take a massive trade, and that's usually the one that goes against them and keeps running and possibly blows up their trading account. I know, because I've done that. I've done that a few times, and again, I come back and I look at blank charts on the end of day and I see these big moves happening. over and over again every month on end-of-day data, whether that's shares or futures or indexes or currencies, commodities, the same opportunities present, but you don't have to be sitting there locked at the screen. So, last point, you can plug your orders in, and one of the things, as I just mentioned, with day traders is they often may not put a stop in place because they think they'll manually exit that trade when it hits their mental stop loss. The great thing about end-of-day trading is you put your orders in, you put your stops in, you might put a target in depending on your strategy, but you're less likely to change any of that. You're just going to check it again the next morning. So it's very important because you're less likely to do any damage to yourself. Whatever your percentage of risk exposure is, if it's 1%, you're going to take that 1% trade, you're going to put your maximum position sizing in for that particular trade. You might have 4 or 5 trades that you're managing at any one time. And again, it gives you the opportunity to manage a basket possibly of trades, and you're just plugging your orders in and you're going to check it again the next 24-hour period. So again, really some great opportunities. For me, lifestyle was key. Originally, as I've told you before, my background was in chiropractic. And so it was a really great opportunity for me to study and learn the markets and trade them and not have it interfere with anything else. So I hope you got some value out of this. If you're not using end-of-day trading, I would really encourage you to step back and look at some of those longer time frame charts. They're less likely to have that intraday manipulation or movement that creates spikes or low volume movement times when the price can move around quite volatile. And that's where retail traders really struggle. They sit there for hours on end, they look for that one opportunity, they might get into a trade, the trade moves against them, they go to break even, it comes back and stops them out. So they've maybe sat there for 3-4 hours, they've taken the trade, and then they've ended up with nothing. So just something to consider. Hope you got some value out of today's video. Take a look at the end-of-day trading. It's fantastic. There's lots of opportunities there. Study your charts, stay disciplined, stay focused, and enjoy the ride. Thanks, traders.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.